Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me for the After Hours show. What a wonderful day. Today, the markets bounced back quicker than they have since March of this year. So a great day in the market. We've got some earnings to talk about and some deep dives on a few companies like AutoZone, what's happening with Chewy, and a connection that Chewy is making, and some others to get into. So we're here to do that. And also, the most important reason that we're here is to answer your questions. What's on your mind? Leave the ticker symbol and your question in the comments, and we will go over it live during the show. So while we're doing that, I'm just going to jump right into what happened in today's market. So stocks extended gains today. And again, today was the biggest rally that the market has had since March of this year. And it seems like the worries over the impact of the Omicron variant started to ease, prompting investors to bet that it will not impact the economic global growth. The bulk of today's rally unfolded at the open as stocks jumped right out of the gate after an upbeat session in global equity markets. The technology-heavy NASDAQ climbed a whopping 3% as tech shares continued to rebound from last week's sell-off. The Dow Jones, it rose 1.4%, and the S&P 500 jumped 2.1%. On the corporate front, Intel shares were up 3.1%, rallying back above its 50-day moving average of 51.33 after the company said it plans to take Mobileye, a subsidiary that develops self-driving cars, public in the U.S. in mid-2022. Tesla shares also jumped more than 4% after UBS raised their price target on the stock, calling the company the undisputed leader in the market. And I cannot blame them for saying that. Tesla is absolutely the undisputed leader in electric vehicles and all the technology that comes with it. Now, Apple, their stock also increased 3.5%. They hit a new all-time high after Morgan Stanley raised their price target for Apple stock. All 11 sectors ended in the green, with 9 groups recording gains of 1% or more. Top-weighted technology, again, up 3.5%, held the lead throughout the day, while energy up 2.3%, and consumer discretionaries up 2.4% finished in the next 2 spots. All right, there's a recap of the market today. Let's hop over to check on Bitcoin and Ethereum on TradingView. Here we have the SFIX. It's what I use to track the S&P 500. Just real quick, yesterday it closed and bounced off that 50-day moving average. And today you can see this nice gap up, breaking the 21-day moving average and closing up above it. It is really strong right now. It was a big reaction in the markets today. Okay, Bitcoin, BTC USD on TradingView. There is a link in the description for a free account to TradingView. Here's Bitcoin. It's at $50,205 right now. And if we scroll in here and look a little tighter at it, I have been saying since Sunday in the Catalyst Watch video that the 50,000 mark was very important psychologically for investors in Bitcoin. And it broke above that yesterday, and today it's kind of holding right there as support at $50,000. That is really good structurally for Bitcoin. Now, like I said yesterday in After Hours, I would like to see a slow progression up and to the right on the chart, not a wild swing of 8 or 10 or 15% in a day or two. Just a nice, steady, 1%, maybe less than 1%, steady move up and to the right. Having a red day every once in a while, it is okay. But moving that way is a lot healthier than any big moves in the market or for Bitcoin. All right, let's look at Ethereum ETH USD on the chart. Now, Ethereum, it's outperforming Bitcoin to a certain degree. Now, today, While Bitcoin is down less than 1%, Ethereum is down almost 2%. So on a day-by-day basis today, Bitcoin's outperforming Ethereum. But in the grander scheme of things, at a macro view, Ethereum is doing really well. It's up over 400%, almost 500%, getting really close on the year, while Bitcoin is up under 100% for the year right now. And as you look at the structure here for Ethereum, even though we had that great big wick for Friday night, early Saturday morning, Ethereum looks like it's just moving sideways like it has been doing for the past month or so. So Ethereum, again, it looks good. It looks strong, in my opinion. And it's just consolidating and moving sideways. It's waiting for its next leg up. Now, for Ethereum, like Bitcoin has that $50,000 line that is very important. Ethereum has a line at $4,000. At 4,000, it's a really strong support level for Ethereum. Anytime it gets to that level, it bounces right off of it. So if you're looking to add to your position for Ethereum, let it get to 4,000, then buy. That's your great buy the dip opportunity for Ethereum. Okay, remember I said to keep an eye on your favorite space stocks this week, because there was a summit including a whole list of space companies presenting. Well, one of the space companies was Spire Global. Ticker symbol is SPIR. Let it load on the chart so we can see this here together. They were up 3.7% today. They did take a big hit after these earnings here back in the end of September. And it's just been slowly bleeding down. But a nice 3.7% move today is really nice. I mean, this is a $4 stock, right? It's holding support at that $4 level. It's at 440 right now. It's at 441 in the after hours. But the reason I'm bringing these guys up is they were awarded a contract under the European Space Agency's Navigation, Innovation, and Support Program, NAVISP Element 2 program. What a long name for a program. But it is funded by the UK Space Agency. So this contract for them, I'm not sure if investors really caught on to that or not, with the stock only being up 3.7% after being down such a big percentage here for this particular stock. Okay, another company, moving on, AMBA, AMBA. I guess we talked about AMBA yesterday, right? And in one of my deep dives for the company. And I guess you all really liked what I had to say, because it's up over 11.2% today. And I'm just kind of joking there. I know my video yesterday talking in a deep dive on AMBA, I'm sure it didn't move the market on it 11.2% today. But I like to think that maybe my video yesterday about them did work out to help move the stock today. Just, you know, being silly. So anyways, nice move on AMBA today. And remember, AMBA makes vision, computer vision for artificial intelligence. And they, as a company, they used to make cameras for GoPro, right? They stopped doing that. They made a conscious decision to stop making cameras for consumer-based products, and they completely restructured their company to create cameras for artificial intelligence and computer vision. And that transition, it hurt this company for a while, and it hurt investors for a while. But this company is making a comeback, and I believe it is at a critical transition point in the history of AMBA's company history. And it has a lot of contracts, one with Rivian, to create the cameras that are being used on electric vehicles. And again, Rivian is one of their customers. this is a stock that I think investors should be paying attention to and should definitely do some due diligence on and see if it's a right company for your portfolio. It is a right one for my portfolio for sure. I like the company. I like what it's doing. I like the shift that it made. And I know it caused pain for the company and investors for a while, but that pain is easing. And I really think it has turned itself around and it's got a lot of good things in its future. All right, another company that I talked about in greater detail is ARK-Best. It was a stock idea that I put forward yesterday. The ticker symbol is ARCB, okay? ARK-Best Corporation. They are a trucking company, logistics company. But anyways, I mentioned them yesterday. They're up 3.2% today. Nice day for them. They are above their 50-day moving average. They used their 21-day moving average to act as resistance today. So the stock is really strong right now. And of course, this company has run up over 60% in just the past few months. So it's been on a really good run. But recently, after its big push from earnings back at the beginning of November, it has been slowly selling off, consolidating. It's trying to build a base right now so that it can push itself up on its next leg higher. So keep that one on your radar. Do your due diligence. See if it's right for your portfolio. All right, let's go rapid fire through a couple of companies that reported earnings today. One I talked about in the Catalyst Watch video from Sunday evening. Again, the most important video I do all week. Dave and Buster's. Ticker symbol is PLAY, Play. They reported their Q3 earnings. They had an EPS of 21 cents. They beat by 8 cents on revenue of $317.9 million, which, get this, guys, it was a 192% year-over-year gain, but they still missed estimates by $1.7 million. So why is that? Well, of course, the pandemic. Anytime there is a scare about a new variant, well, then people stop going out to restaurants. Restrictions get placed. Look at New York City and all the restrictions that are on citizens living in New York City. It is just crazy and mind-boggling, right? Well, Dave & Buster's also reported in this earnings report, comparable store sales increased 1.1% compared with the same period, not in 2020, but in 2019 before the pandemic. So that is really good for Dave & Buster's. Now, their guidance for Q4, which they'll report later in January, the company expects comparable store sales to be slightly positive compared with Q4 of 2019. We're not comparing anything to 2020. Otherwise, the numbers would look like Dave & Buster's is going to the moon with crazy beats. But if we compare it to 2019, before the pandemic, and we can see growth from that point, then Dave & Buster's is actually doing good as a company. Now, walk-in comparable store sales are expected to remain strong, while special events comparable store sales may see a temporary headwind and will have a larger impact on total comparable store sales due to a higher historical weighting in the fourth quarter. Christmas parties, right? A lot of companies will book Dave & Buster's to bring the whole office, the whole team to a Dave & Buster's restaurant to eat, relax, have their Christmas party. Well, when not as many companies are doing that due to restrictions and so forth from the different COVID variants, then that's why Dave & Buster's will see a little decline to maybe a little growth on the special events portion of their business. So they were up 1.3% today and up 4.1% in after hours. So investors are happy with their results. But if you look at the chart here for Dave & Buster's, you can see they had a nice rally starting way back in October of 2020, all the way to their earnings report in March, and then they've just kind of been falling off. You know, we had the Delta variant interfere with their business. We had the Omicron variant interfere with their business, and different restrictions and lockdowns and so forth. So it's good to see some growth and rebounding in this company. Once things get back to normal in society, Dave & Buster's will be one of those companies that will have great growth for it during those times when we get back to some sort of normalcy, you know, whatever that normalcy may be. All right, another company, we talked about it on the Catalyst Watch video, Builders First Source. Ticker symbol is BLDR. Let that load here on the chart so we're on the same page. Look at this, guys. Beautiful, right? They had their earnings back here on November 4th, a nice gap up from those earnings. They've been riding above their 21-day moving average, and they just gapped up way above that. They actually got to a new, fresh 52-week high today, earlier this morning, of $80.95, and then they pulled back from that all-time high. Now, Builders First Source, their shares surged after the company provided investors with their fiscal 21 through fiscal 25 long-term targets during the company's Investor Day. Yes, it wasn't earnings today that moved the company. It was their Investors Day. It's what we talked about in the Catalyst Watch video from Sunday evening. Now, from 2021 to 2025, the company's base business targets include a 10% or so net sales compounded annual growth rate. That's amazing growth for a supplier of builders, right? They supply the lumber and the materials needed to build homes and so forth. And boy, oh boy, do we need homes built in America. So their future is looking really good. Now, speaking of home builders, let's talk about Toll Brothers. Ticker symbol is TOL. They had their earnings today. We talked about it in the Catalyst Watch video on Sunday. Now, they were up 0.5% during regular session, and they were up 1% in after hours. Now, when we talked about them on the Catalyst Watch video, I wasn't sure. I thought maybe their earnings were already priced in, and it seems like investors may have thought the same thing since they were only up 0.5%, and they had pretty good earnings. Now, they did reach a new 52-week high this morning off of those earnings. Well, I shouldn't say that. Their earnings were in the after hours today. The new 52-week high was $72.49. And then, of course, it pulled back a little bit from that 52-week high. But they reported their Q4 2021 year-end earnings report. They had an EPS of $3.02, and they beat by 54 cents. They had revenue of $3.04 billion, and that was a 19.2% year-over-year gain, and that beat estimates by $130 million. Now, the net signed contract value was $3 billion, and that was up 10% compared to fiscal year 2020's fourth quarter a year ago. Now, contracted homes were 2,957. That's down 13%. Now, backlog value was $9.5 billion at the fourth quarter end, and that was up 49% compared with the same quarter of last year. Homes in backlog were 10,302, up 32%. Home sales gross margin was 23.5% compared to last year's fourth quarter home sales gross margin of 20.1%. So they're looking good as well. Now, the next stock I want to talk about, a lot of retail investors like this company. I like this company for the long term. That is ChargePoint. Ticker symbol is CHPT. Now, ChargePoint, they reported their earnings today, and investors didn't quite like the actual earnings themselves. If we look here, they were up 5% on the day, but they dipped 2.8% in after hours. Now, ChargePoint reported their Q3 earnings. Their EPS came in at a loss of 21 cents, and that missed by a nickel, 5 cents. And they had revenue of $65 million, which was a 78.8% year-over-year gain, and that beat estimates by $1.77 million. Now, for the fourth quarter and full year guidance, the company expects revenue of $73 to $78 million for its fourth quarter ending January 31st, 2022, and is raising its full year revenue outlook to $235 to $240 million from $225 to $235 million. So they're bumping that up on the high end of their already high estimates for their year end, or their fiscal year end, which ends again on January 31st, 2022, when their fourth quarter ends. So ChargePoint, while investors may not have liked the results in the short term, I like the results for the long term. They're raising their guidance. This is good for the company. I like ChargePoint. I have for a while. I still like ChargePoint. Even with this recent sell-off is fine with me because this thing ran pretty quick, and yeah, it had nice gains. It was a very nice trade. And this pullback, it just allows investors who haven't started building their position yet in ChargePoint to go ahead and start doing so. ChargePoint is a market leader for EV charging, right? It's a good company to have in your portfolio. It is a growth company, so it can have wild swings. If you're trading it, make sure to always use a stop loss to protect yourself. Okay, here's one I said to stay away from in Sunday evening's Catalyst Watch video, and that is SFIX. And the ticker symbol is SFIX, SFIX. They had their earnings today, and look at this, ladies and gentlemen. This is one I said stay away from. Yeah, let me fix this. There we go. I said stay away from on Sunday evening. I said it was down here at the bottom in the or middle of their trading channel that they're in, but it's been declining for a while. I talked about the past 2 out of 3 earnings. They actually popped and gapped up. Well, I wasn't so sure about earnings this time around because this thing's just been selling off. Now, it was up 4.6% during regular session, but I said stay away from it. That 4.6% gain that you may have gotten during the regular session hours, well, you'd be underwater right now because the company is down 17.9% in the after hours. So I am on a win streak when it comes to stocks that I have said stay away from. So far, the warnings I get have been 100% correct. So hopefully, this is one that you followed along with and you stayed away from. Now, they reported their Q1 EPS of a loss of 2 cents, which beat by 12 cents. They had revenue of $581.2 million, which was an 18.5% year-over-year gain, and that beat by $10.75 million. Okay, wait a second. You're telling me that they beat on their top and bottom line numbers, but they were still down 17%? Why is that? Well, as I always say with earnings, you have your EPS and your revenue. That's one aspect of an earnings report. Then you have guidance. That's another aspect of an earnings report. And the guidance is actually, it can be more important than the top and bottom line numbers of an earnings report. And why is that? Well, stocks are based off of what a company is going to do in the future, not what a company has done in the past. And that is reflected in the stock chart for SFIX right now, being down 17%. Their guidance for what the company expects to do in the future doesn't look so good. Now, their Q2 2022 outlook has net revenue expected to be about $505 to $520 million. Okay. The estimate for next quarter was $586.12 million. Do you see the difference? They expect 505 to 520 million. The estimate was 586.12 million. There's a big gap there. That's why there is a big gap down in the stock, because there's a big gap down in what was expected for their upcoming quarter. All right. I hope that is a little bit of a refresher for you seasoned investors and a lesson for new investors about earnings and how you can get burnt if you're not careful. All right. Moving on to another company, SentinelOne. They reported their earnings. Ticker symbol is real easy for this one. It's the letter S. Now, we talked about them on, again, the Catalyst Watch video on Sunday. And here's what they did. Well, first, before I point out what they did, look at the chart here. This company hasn't been public very long. Their last earnings in September, they missed, right? Then they had this nice rally through October. And then over 2 weeks, they lost 41% of the stock's value. 41%. So today, with the market being green and investors thinking, well, this technology company, it's bound to do good, right? Well, other ones did good, so this one should do good too. Well, sometimes we can use competitors or peers of companies that we're investing in or trading on. We can use their peers and what they've done on their earnings report, but it's another data point. We have to use as many data points as possible to come up with our conclusions. Now, SentinelOne was up 13.4% today, a really nice gain. And if you traded that, nice gain. Good for you. Great job. But they're down 8% in after hours. Now, they beat by 3 cents and they beat on revenues, but they guided Q4 revenues above consensus or the estimate. Now, total customer count grew more than 75% year over year to 6,000 customers as of the end of October, on October 31st. Customers with ARR, and remember, ARR stands for annual recurring revenue. They had customers with annual recurring revenue, ARR, over $100,000. That grew by 140% to 416. The company issued upside guidance for Q4, which is reported in January, and sees Q4 revenues of $60 to $61 million versus estimates of $56.5 million. So they're guiding above estimates. So overall, you would think that it looks good. They beat on the top and bottom lines. They beat on their guidance, which are two critical points of an earnings report, like we just talked about, right, with SFIX. However, there's a third point to a company's earnings report. And that's the little details that they sprinkle in, usually towards the bottom of an earnings report, that talk about risks to the company. SentinelOne seems to have some risks involved. I'll leave it at that. Maybe we'll dive into this one a little bit deeper on tomorrow's show. If you guys want to know about Sentinel-1, let me know. Otherwise, let's see. Did I miss the charge point talk? Yes, I did talk about charge point, but it's not a big deal. Two options. You can back the video up to get to charge point, or I can talk about charge point again. It's not a problem. CHTP for charge point, and oh, I didn't do that right. CHPT for charge point. Okay, charge point here in their earnings. All right, look at the chart here for charge point. Now, the earnings for charge point, they were not bad, okay? They missed a little, not a big deal. They were up 5% regular session, and they're down 2.8% in after hours. Now, customers or investors for charge point didn't seem to like the earnings all that much, which, you know, it's not a bad thing. People have their own opinions when it comes to the different companies that they're growing in or investing in. So while the earnings here weren't too, they weren't, I don't want to say not positive, because in my view, they were positive. Their guidance was also positive in my view. So it's just that some investors think short term when it comes to companies like this, growth companies. So they may not see the same things that other investors do. Now, when it comes to charge point, and I'll just let me hop over here. Was that another ticker I just saw in the comments too? Should I buy Sticks? I get tongue-tied with saying that company. Stitch Fix. No, I would stay away from Sticks. Oh my gosh, I always get it messed up. I always get it messed up. Oh man. Stitch Fix. Oh wow. Okay, maybe I can get you know, it's these this part of the video, you know, when you record videos and then you publish them instead of going live like we are right now, this would be a part of the video that I'd want to cut out, just because I'm messing up the words. I can't get the darn word right. Oh boy. Yeah. All I can do is laugh. But anyways, here's the deal on ChargePoint, and then we'll move on. ChargePoint had EPS at a loss of 21 cents, and that missed by a nickel, 5 cents. Not too bad. They had revenue of $65 million, which was a 78.8% year-over-year gain, and that beat by $1.77 million. Their Q4 and full year guidance, okay? What the company expects in the future. They expect revenue of 73 to 78 million for the fourth quarter ending in January 31, 2022. And they are raising its full year revenue outlook to 235 to 240 million from 225 million to 235 million. So the growth in the outlook look really, really good for ChargePoint. So I think ChargePoint, they are a leader in electric vehicle charging, and I think they will remain a market leader for the foreseeable future. I think it's a great company to invest in, but you have to remember that it is a growth company, and growth companies can be very volatile. They can have days where they're up 5%, days where they're down 10%. And it's just that way until they can get a little growth under their belt and become a more sustainable company in the eyes of the investor. And then things will start to level out. But then again, look at Tesla. Tesla can have big moves still. and it's a pretty established company right now in its own right. So you have to keep those things in mind. Okay, let's see here. What did I miss? Oh boy, a whole bunch of chats today. Let's see. Charge point. Okay, Stitch Fix. I got it. I got it. Finally. I won't say it again. I think that's a company right now to stay away from, even though it looks interesting. Now on the chart, that's SFIX. On the chart, it may look interesting because they are down in the gutter. They've been selling off. I mean, just look at this. They've just been down, 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 down. Every earnings, they might pop up and then go down, at least for the past 2 out of 3. Now we're 50-50 on earnings. I would say stay away. They were up 4.6% during regular session, but you lost all that in after hours because they're down 17%. So I just think it's a company to stay away from. There was some buying here during regular session. I mean, volume was up on this thing, 9 million with an average of, let's see, I just lost it. There we go. Volume today was at 9.8 million, where the average is only 2.7 million. So there was a lot of trading around this today, but I still think it's a company to stay away from right now. And I have not, since doing these live streams, for companies that I have said stay away from, I haven't missed yet. Knock on wood, right? Hopefully it stays that way. I don't do that very often. There's only probably 3 companies, maybe 4, that I've ever said stay away from, and this is one of them. Okay, let's see here. You are welcome, Chris. Let's see here. I have 2023 calls. Okay, thinking about buying stock tomorrow. All right. Today in the market, right? Today being Tuesday, we have to think about macro view here of the market. Yesterday, this is what I said, and I'll just reiterate it. Today should be a good day, and it was a good day. Tomorrow should be a good day, much like today, as long as there's no crazy news, okay? When we get to Thursday, Thursday may be a day where things cool off a little bit. And that's because Friday, we get CPI data, inflation numbers. So investors on Thursday will probably be really cautious, and the market will probably be flat because they're waiting to see if inflation goes up, comes in line, or is lower than estimates. And whatever that data says, that'll move the market on Friday, either positive or negatively. So we have to keep that in mind as investors, what the macro view of the market is, because it can affect all of the stocks we're investing in or trading on, right? Okay, so thinking about buying tomorrow, not a bad idea. I would definitely look to do earlier in the morning versus later in the day for any trades or investing. But depending on why you're buying stocks tomorrow, are you buying stocks tomorrow to trade them, or are you buying stocks tomorrow for investing in a company long term? Because if you're buying stocks tomorrow to trade, you have to remember that stocks already went on a run today and yesterday. So that's 2 green days in a row. We'll probably have a green day tomorrow. But then Thursday, we might not get much action. And then if Friday, if the data comes in and it's negative, the market could be red and down. So you have to be careful there. If you're investing, well, I mean, if you're trading, then that would be okay. If you're investing for the long term, if you have a stock that is in your buy zone, then it would be okay to buy tomorrow if it's in your buy zone. And the way you figure out whether it's in your buy zone or not is you look at the technical analysis, you look at the chart, and you determine whether the company is at support. Has it moved up to resistance? If it's at support, that should be a buy zone. If it's at resistance, you should hold and you should wait for the stock to come back down. So I don't know your exact position in what you're doing, but that's just some basic rules that you can follow. Let's see here. Yeah, I'm not saying that company name again. QuantumScape. Okay, I see QuantumScape there. And Hut 8 Mining. I subscribe. Thanks. Oh, awesome. Great job. Thank you. I appreciate that. Was swing, but you said the same. I'm not saying that company's name again. How about SFIX? Oh boy. Okay. QuantumScape. QuantumScape is interesting, and I'll tell you why. Let me pull their chart up here, and then I wanted to do a deep dive. I think I've got 3 different companies I want to do a deep dive on. But that's fine. I'd rather answer your questions than talk about the stocks that I have planned. That's fine. All right, so QuantumScape, they were up 5.6% today. They're up almost 1% in after hours. Now, here's the thing about QuantumScape. It's down a lot from the euphoria that it had back in December, a year ago. I do not think QuantumScape is going to see these big old highs. What is this all-time high? $132.73. I don't think it's getting back there anytime soon. However, I do think that it is near a base support. Now, for QuantumScape, that base support, there's a range. It goes down to about $20. I'm going to put a couple lines here. About $20.50 for the low side of that range, and the upper side of that range is about $26.50. Okay, so now that I got those lines in there, if we look here right now, QuantumScape is at the very top of this range that it's been in. Let's see how many months. Going back to July, August, all the way through November. And then it had that big run because the whole EV sector had a nice October rally. QuantumScape was no different, much like ChargePoint. ChargePoint, QuantumScape moving almost identical to one another. So just be careful. QuantumScape is at the top of this range right here. The wick of today's candle. I always use daily charts when mapping these out. So this is a daily chart here. The candle of today's wick did break above it just barely. It got to a high of 26.69 as its high today. And then it fell back under that. And again, this line is at 26.50. So it being at the top of the range right here, I wouldn't buy right now. What I'd want to see to buy is it either sell off to come back down to the middle of its range or lower, or if it does break out of this, I want to see it back test and use this as support instead of resistance, and then buy on the back test, because QuantumScape is down here underneath its 50-day moving average. And every day in every live stream, I say this at some point: when a company is below its 50-day moving average, that is a negative sign and it is bearish. If a company is above its 50-day moving average, that is positive and bullish. So you have to keep that in mind as well. Another negative sign is that it's under its 200-day moving average. Now, it doesn't mean a company can't get back above them. Of course they can. They do it all the time. But they are things that you have to be careful, because traders and investors using TA will look at these different lines, these different positions, and they will trade and invest off of them like everyone else. Something else that's interesting, there's a company that is coming public through a SPAC. Oh, what is it called? Is it Power Sport? Now I don't forgot the name of the company. Let's see if I go here. I talked about it in the Catalyst Watch video yesterday. I mean, on Sunday. Give me a quick minute. I'm going to pull this up. There's a company I want you to be aware of when it comes to QuantumScape. It is very important. Just give me a quick second. It's loading over here, so I don't miss it. All right. Okay, it's loading. Just give me a quick second. This is important to know. I wish the information was more out there to investors so they knew about this. Okay. Okay, let's see here. Where is it? All right, it's coming up. Hold on. It's just loading slowly. Okay, here we go. The company is Solid Power. Okay, the company is Solid Power. The SPAC is ticker symbol is DCRC. This is the SPAC. It's a long name. Decarbonization Plus Acquisition Corporation 3 is the SPAC name. It's bringing Solid Power public. Now, the one thing interesting about this company, they do the exact same thing as QuantumScape. Of course, each company is different in the sense that they have different formulas, different methods, but they're in the exact same space. Now, QuantumScape has a $10+ billion market cap, right? A lot of funding too behind QuantumScape. Solid Power is coming onto the market with a valuation of $1.2 billion. So a little bit less on the valuation side compared to QuantumScape. Now, I think that once investors figure out this company, Solid Power, and this acquisition goes through with the SPAC, I think investors who feared they missed out on QuantumScape may jump into Solid Power, hoping to not miss out again. So that's why this is on my radar. It was up 6.6% today. Talked about it in the Sunday Catalyst Watch video. Comes out every Sunday evening. I talk about what's important in the week ahead. So this is one to keep on your radar because of QuantumScape and this being a competitor, a peer, however you want to look at it, in the exact same space. So that's definitely something to keep on your radar. Let's see here. What else did I miss here? Oh, Hut8. All right, let's pull up Hut8 Mining. Hut8 Mining, out of all the mining companies, is actually my favorite. I own Hut8 Mining in my portfolio. Ticker symbol is HUT, HUT. I like what they're doing. They seem to be the whole concept of Bitcoin miners and using renewable energy. If you're worried about that type of thing, Hut8 Mining is a very clean Bitcoin mining company. Now, there was some news about Hut8 Mining today. They signed an agreement with Foundry Digital to purchase 2,505 micro BT M30S machines that are currently installed at the company's site in Medicine Hat, Alberta. So Hut8 is buying new equipment to expand their mining process, or capability, I should say. Or maybe capacity might be a better word. So they're expanding their capacity. Let's see here. Also, a hosting agreement between the two. I don't know if there was a don't know if there was an amount given. They do talk about in this little clip here that it will expand their operating capacity, and there's some NVIDIA GPUs that they'll also be getting. I don't know. So they'll be able to approximately 1.94 EH a second. I don't know what that EH stands for. But they're talking about the NVIDIA GPUs to approximately 1.94 EH per second. I don't know what that EH stands for. So that's interesting. Came out on the wire today for Hut 8 mining. And of course, back on December the 2nd, which is a while ago, they came out and said that they mined 265 Bitcoin during the month of November. And right now, their mining capacity is 8.83 Bitcoin per day. So they should be increasing that per day count capacity with this new agreement that they're forming. And again, that's with Foundry Digital, and it's up in Canada. Okay, let's see. So Hut 8, it had a pretty nice day today. Up 9.3% during regular session, up 1.5% in after hours. Right now, Hut 8 mining, it did fall out of its channel here that it was in. So I think it is a bargain right now at $10.20 a share, even though it had this, over 10% run today in total. I still think it's a bargain right now. So there's that. And remember, it does move with Bitcoin. So when Bitcoin goes down, its share price also goes down. When Bitcoin goes up, its share price goes up. So that's something to keep in mind as well. We had a zone here. This was our buy zone. It was as low as $8.75 and as high as $10. This was our buy zone for Hut 8 mining. We talked about this several live streams ago because it had built a nice little maybe support resistance range over here back in September and October. So that's the range that we were looking for our buy zone on this dip. Wasn't sure if we were going to get it because it did come down to the top of it. It bounced off of that, but it did eventually come down. It almost got to that 200-day moving average before bouncing. So really nice. And it's right now at the top of that buy zone at $10.20. So I still say it's a buy right at this moment in time. Let's see here. What else do we have? What about Clove and Wish? They are really low, looking for a long swing for when small caps small caps have money coming back in from money rotation. Okay. I've been using the Bitcoin chart to swing Hut 8. Yeah, that works. Absolutely. All right, let's pull up first Clove, CLOV, for them. Let that chart load here. All right, so they had an interesting bounce of 6% today. Clove and Wish, I haven't really looked into either one of those companies. Just because of the wild swings that they can have. If you look at it, I mean, it's definitely at a bottom here. But the problem that I have with Clove is I'm not sure where the floor is, because it was building pretty nice support around the $7.25 range for a while. It had pretty good support there. But since it broke that support, I'm honestly not sure where the floor will be on this one. I mean, it's well under its 50-day moving average, 21-day moving average. It did bounce yesterday, just slightly. It was only up 0.7% on the day. But today's move was a little bit more at 6.2%. I mean, this could be a bounce that continues tomorrow. But then if we get bad news on Friday, it's going to come down. For any big swing on a company that is volatile like Clove, I'd almost want to wait until the CPI data. That's the caution that I would have. Because if that data comes in negative, it's going to hurt stocks like this. Affirm, oh, I love Affirm. I'll pull Affirm up in just a moment. Let me put Wish up here. Talking about Clove and Wish, Smile Direct Club, that was one that I warned, I guess its last earnings report, to stay away from, and that's one that dropped. And today they announced that their CFO is stepping down to pursue a CEO position at a health company, but the stock went up on that news. So sometimes stocks can move in weird ways. Okay, yeah. See, Wish is the same way. I don't know where the bottom might end up being, and it's just been falling and falling. It's kind of why I stay away from these companies, because they're unpredictable. You know, if I say, all right, this looks like it could be a good trade, I mean, the next day this thing could just drop. I mean, look at this back here on October the 20th and October 19th. And then you go October 18th, right? You have 2 green days, and it bumps up against its 21-day moving average. Well, the next day, you get it to bounce off of the 21-day moving average, which would have been a brilliant 14-point move, 14% move. But then the very next day, it drops 4.4%. So I guess if you sold out on that day, you'd still be up 10%, but it just moves in mysterious ways sometimes. I mean, it is possible that this could be have a green day tomorrow, and then you could sell into softness on Thursday. It's a possibility, but I'm just too cautious on these two to say, yeah, this is a zone, this is a buy zone, this would be a swing on it. I'm too cautious to be able to say with certainty what those two might do. Okay, Affirm. Hey, Devin, SoFi back above $20 by year end or weekend? If CPI data on Friday is positive, it'll be back up really soon. I'll pull SoFi up here. SoFi actually had a good day today too, and I'm glad I was wrong on my caution about SoFi. Let's see here. Yeah, I like SoFi. I own SoFi. Affirm. AFRM. I also hold Affirm as well. All right. Let's see here with Affirm. See this this pullback right here was nice. All right. See, one problem I have with Affirm right now is it has got support. Let me put the line here. It has support right about $110, $108. It has support right there. But yesterday, it sank below that support. We could probably go down to about right here, 102. So this is kind of like a buy zone right here for a firm. About $100 to $102 on the bottom side, up to $107, $108 on the upper side. That zone is a buy zone for a firm. So it was up 3.4% yesterday and 10.6% today. If it were to come back down to this zone, this is where I would start getting some more. The second place, which would be a little higher, if a firm gets up to either the 21-day moving average or the 50-day moving average and finds resistance there, then that would be a key sign to, okay, if it's got resistance here, then there's a good chance that it may come back down to my zone here, my buy zone. If it doesn't find resistance here, then, you know, who knows? It could run for a while. But this one is going to, it moves on news. So whenever news comes out about a firm, then it moves. Now, the last bit of news that we have for a firm was at the end of November, and it was a $127 price target from Piper Sandler with a rating of neutral. So it's almost to that $127 price target. So right now for a firm, it's not in my buy zone. It had a big run up today. It very well could be green tomorrow. But then again, the macro view looks like Thursday could be a calmer day in anticipation for inflation data. That's my thought. Okay, SoFi. Nice day today for SoFi. It wasn't big moves like a firm, but it was still a nice day nonetheless. All right, this is one that we've been clocking for a while now. SoFi up 5.7%. It's at 1661 right now. And this area that it's in right now, there's a pretty big zone right here. It doesn't have resistance until it gets to about 1775. That's where resistance is for it. Right now, its 50-day moving average and 21-day moving average are crossing over each other, moving down, of course. And they're at $20, $19.20, $19.33. So the 200-day moving average, though, is at 1778, and I've got that resistance here at 1775. So let it run up to 1775, and then we'll see how much momentum it's got. And that's only another 6.7% move. So if it has another run like it did today, it'll reach it. But there could be some friction there to get above it. Volume right now, it looks to be going up a little bit. One thing nice about SoFi is that the RSI, right now, SoFi is still oversold, but just barely at 29. And 30 and below, that's oversold. So it's at a 29 right now, but the RSI has started to hook up, and that's a good sign. But volume today was 30.6 million, on average 35.4 million. So a little lighter on volume today. So yeah, I'm all in on SoFi. I think this is a great company long term. It's a growth company, so it can have wild moves. Just keep that in mind if you're investing in SoFi. Let's see here. I was kind of dug in. Me and SoFi go way back, Yeah, remember when I asked the question about what was one of those stocks that you caught on before the rest of the market did? I think you said SoFi, Devin. So I bet you guys do go way back. I'm holding SoFi till Q2 at least. I want to see the student loans come in, Super Bowl, charter, etc. Yeah, all of those things are great catalysts for SoFi. We're just in this period of risk-off environment, the whole macro scene changing, and growth companies getting hurt the worst in this whole change that we're in right now. But hopefully, as we move out of winter, I know we've just barely started winter season, but once we move out of it, things will definitely change on the grand scheme of things. At least that's what I hope, right? I hope that's how it goes down. Let's see here. All right, here's another one. We got FNKO. Okay, Funko there. All right. Well, this one has been really choppy. Really choppy. But it looks like it's been trying to build a base here, so that's not too bad. Had a really strong run up there. It got to its peak, but it looks like it is trying to build a base. So let's see here. Let's open this back up. Let's see here. So it looks like we might have, what does that look like down there? No, it's too low. It looks like we might have something around the $16 level as support. And when you're looking for support lines, you want to find a line that has as many touch points as possible. When you can find that, that's when you have your lines that you can draw. As many touch points as possible. So now, where could the next area be? Probably this. Probably right around, I'm gonna call it $18. Just get to an even number. So it looks like this is like a buy zone here. It's between $16 and $18. It seems to be finding some pretty good support in those two areas. Now, of course, with it being below that 50-day moving average, that's negative. But look at this too. Today, when it got to its high of 1732, that was right around its 21-day moving average. Its 21-day moving average is 1736. So it got to 1732, just pennies under its 21-day moving average, and then pulled back from that. So tomorrow, I'd be watching to see if it can break above that 50-day moving average. If it doesn't, then it could be coming back down to the bottom of this zone here. So right now, with it being in the middle of its zone and finding resistance off of its moving averages, I might be watching for this thing to come back down before I'd buy it. Just me personally. So that's Funko. Okay, let's see here. I went to 15 again. I got angry. Is that on SoFi you're talking about? You got 15? Okay. Yeah, so Yeah, with Funko right here, you say you've been adding. Yeah, with this move sideways, it looks like the buy zone is $16 to $18, and it's definitely consolidating down here. When it's up here around this $19 area, I would definitely not be buying up there, because that's where you're finding your resistance, and usually it's reversals as well. So I'm gonna put a line here that's at about 1986. I'm gonna change the color. 1986. That was a good year. I'm gonna change it to red, because that we don't want to be buying when it's up there. So yeah, there's some TA there for Funko. 16 as the bottom, 17 as the 18, sorry, 18 as the top. That's the buy zone. And if you're trading it, when it gets to 19 or gets close to 20, more like it, that's when you want to start thinking about selling if you're trading it, because it is definitely in a range here. It is definitely range bound. All right, what other tickers are we looking at here? Maybe be a January, February small cap rally. It's tough to say. A month ago, I was a firm believer. Another ticker. Okay, I'll look at that one next. Oh yeah, a month ago, I was a firm believer. Maybe it was probably a month and a half ago. I was a firm believer in the end of year rally. Now, we had the October rally, right? November had some sectors doing good, some sectors not doing so good. So it just wasn't that great. Now, at the beginning of December, I talked about, okay, what about a Santa Claus rally? Because last year we had a Santa Claus rally. In December, things went up. Look here. Look at the S&P 500 to show this. The structure is different now than last year. I still have that purple circle there. That purple circle just above my head, that is December last year, and then going into January of last year. The market was up above that 21-day moving average, and it was healthy and it was moving up. Now, if I put a circle around the same time frame, got to go to December here. All right, so this is what December this year is starting out like. So I know history doesn't repeat itself, and I know past performance does not guarantee future gains or returns or any of that, but we can learn from history. So look at the structure last year. December started with a little bit of red moving sideways. December this year started with red and a sell-off and moving down. And then we have this big gap up today. There was no big gap ups last December. It was a steady climb all December. We moved sideways in the middle of December, and then we took off and we ran all the way to the end of the year. And then January 4th, there was a little bit of red, but we always bounced off of or moved along the 21-day moving average. Now we've been under the 21-day moving average, but today, of course, we did get back above it. And then we didn't have a big pullback then until the end of January for the S&P 500. And that's when it used the 50-day moving average to bounce off of. So we're looking, we're not in as good of a structure as we were last year. So that's what I'm concerned about. Valuations, obviously, the chart is up and to the right all year long, so valuations are higher now. But of course, companies have been reporting good earnings. I believe we are over 80% of the earnings that came in during this earnings season for the S&P 500. They came in beating expectations, so that's good, right? So I'm just not so sure about a year-end rally, the Santa Claus rally that it's called. It's possible, and I'd probably give it at least a 40% chance of happening. But we've got to get through the inflation data on Friday, and that will probably be a big indicator of whether or not we're going to rally. Like you're talking about here, January, February, rally in the small caps. If the inflation data comes in either in line or below and it's positive, then it's possible we could have that rally. If that inflation data comes in negative, then I don't think we're going to have it in December for sure. But when we're investing, when we're trading, sometimes it's hard to determine the medium term, median range, right, time-wise. Sometimes we can make good calls about, what's going to happen in the short term using technical analysis and so forth, and the long term using our investment thesis. But in the middle, that's where things can get murky sometimes. So right now, I'm about 40% that we might get a Santa Claus rally, but it all depends on Friday. Friday is like the linchpin for the whole market. So it's pretty important. I saw another ticker on there, FUBO. Okay. FUBO. They've been doing good. They had a nice run. Look at that. But like most others, off of that euphoria back in February of this year. And then they had a really nice October rally. And then things just kind of fell apart, missing on earnings. That was the big catalyst here that kind of wrecked what they were doing. They had growth on their revenue, but they were not making money with their money. They came in on EPS at a loss of 74 cents, which missed by 20%. But they had the revenue. They beat by 13 million. Right now, the RSI is at a 23.65, so it is oversold right now. Volume is on the light side right now. The RSI looks like it wants to make a hook right now and hook up, but volume is a bit light. This is one that I'd probably wait on. I'm not real big with risking on you know, big speculative stocks like this one. I mean, it looks like there may be something around 1650. Let me change that color as a maybe a support area. I know it's at 1850 right now, 1858, but just trying to build something out here. It looks like something around 2050 is a bit of a zone here for them, like a buy zone. So the last time it was 1850 as the bottom and $20 as the top as a buy zone. There's definitely some action back here November of last year. We've got some points of contact here of April of this year, May of this year, and then of course it bounced out. Now it tried to find support on its last pullback after earnings around $20, but failed, and then bounced here on the 1650 line. So it looks like on a technical structure here, it looks like this area where it's in right now is a buy zone. And then, of course, you get up here to $30, and that's your selling area. Maybe even as high as 32 if it was able to build up enough momentum to do that. But again, it's only had that much momentum 3 times since May to do that. If I lower my expectations a little bit, it comes in right around the $30 mark. $30.50 there. That's the kind of sell if you're trading this. I'll make that a red line. So your buy zone is down here around 1650 up to $20, and then if you're trading it, you would be just selling it around $30. That's your trade. And if you were trading this, I mean, this is a nice trade setup here. From where it is now, if it was able to get up to $30, that's a 64% gain. I mean, that's a very nice trade setup right here. Really nice. And then, of course, there's this middle zone of support that it can find every once in a while around $25. Let's make that a different color too, just so we can kind of color code our things here. All right, so it looks like it's in a buy zone right now, and this is for FOBO. Is it FOBO or FUBO? All right. TV, FUBO ticker symbol, buy zone, 1650 up to $20, and then you're selling it at $30. And then it looks like sometimes it wants to bounce around this $25 area, especially after being up to $30 or above. It pulls back, it kind of bounces around, and then it moved up past that again. So you can make a second trade there. So that's an interesting trade setup right there. I find this one pretty cool. I might add this one to trade setup, see how it reacts. This one looks interesting. I like this structure. Okay, let's see. You are welcome, James. Last one, I promise. T-Doc. Okay. Teladoc Health. T-Doc. I like Teladoc Health long term. I think it's got staying power. I think it's got the technology. I think it's got the market. So this is one that I wouldn't trade. This is one I would hold. And when you look at this thing and how it's reacted, I mean, it is definitely down there in a zone. If you look at back here, just above my head here, where it's like really sold down much lower than where it is now, I would probably be looking at, let's see here. All right. Change the color of that. I'm going to get the buy zone here for Teladoc. All right, so that line I put in at $31. That's like a low. Now there's another one here at about 55. I don't think it's going to get that low, but I want to make sure I've got my line zone here. All right, so if we look back, this thing bounced off of 94 back at the beginning of this year, maybe 93-ish. All right, we'll call it 94. I'm not sure if you can see it back here above my head. It was at 94. It bounced off of it 2 times there, maybe 3 times. So that's a good area there. And then if we're going up from there, it looks like we have to go probably around 104, 103. All right, right there. All right, so it looks like 104 is the top, 93, 94 is the bottom. So you got about a $10 swing there, a $10 difference there for a buy zone for Teladoc Health. And they seem to be lining up pretty nicely here. And then you got something that wants to form right around $120, $121. So it looks like we've got 2 different zones here. One's a little bit higher than the other. All right. All right. So here for Teladoc Health, again, I think this is a long-term buy and hold company. It's a Kathy Wood favorite, but that's out of the question here. We're focusing on what we think here as an investing community, and it looks like 94 to 104 is a buy zone. So it's in that zone right now, and I'm not thinking of this as a buy and trade like Fubo TV. Another one I can't pronounce. This is one that I think has a setup that you buy and you hold this thing. And then there's another buy zone that looks to be a little bit higher up on this at $120 up to $135. So you've got 2 different buy zones here. A lower one where it's sitting in between right now, and then you got a higher one here where it likes to find support. Now, if we look at the volume though on this, it's kind of interesting. Now, the relative strength is at a 27, so right this moment, it is oversold, 30 and below, and it's at 27. But the volume on this thing has just been really high. You have to go back to earnings in May, and that volume's not even as high. it comes close, I mean, wow. Volume has been really, really high right now. So that's interesting. So on this, I think it could go lower. That's not out of the realm of possibilities. It got to a low of $88.25 today. So that's a $10 difference from where it is right now. So this can go lower, but it looks like it gets down into the 80s and we see volume pick up to buy this thing. Yesterday, it got to a low of 89, so it can get down to the 80s for sure. Let's see here. All right. Yeah, I like that. I like that. James, you said you promised only one more. LOL. Okay. My wife wants to know about Tattooed Chef and Palantir. Then I have to go. All right. Tattooed Chef, I don't think there's a big enough market for it. Palantir, I think it's a slow grower. That's my quick reactions there. But let's look at this thing technically and see how it's doing. All right, Tattooed Chef. I think the overall market is too small for this to amount to much. Not saying that it's nothing. Now, I did have a buy zone already for this one. It goes down to about $15.25 up to $16. So that was my buy zone for this right now. It did get as low as $14.81. So not saying that it can't go below 15.25 there. But that was my buy zone here for Tattooed Chef. It looks like there's several areas that it has fallen and it has bounced in this zone. Yeah. So if we're looking at that, it's in that zone right now, but it has dipped below that zone right now. RSI is a 35, so its move today kind of brought it above being oversold. November 16th, it got into the zone. November 11th. There are a lot of times, and it seems to be around earnings. Back here in August, several days, it's in that zone. We go back to earnings in May, and it got into the zone, or 5 cents from it. We go back to April, it's in that zone. So, I mean, you can see it gets into this zone, and it likes to bounce from it. Now, if we go back to December, a year ago, right? It's kind of interesting. Nice coincidence. We go back a year ago and it dips out of this zone and it falls to a low of 1444. However, its 200-day moving average was also right there with it. Unfortunately, that is no longer the case. And of course, we go back here to August of 2020, and it falls completely out of the zone. So you can see there's a lot of times that it bounces from this zone. The one thing to keep in mind with this one, if you're going to try to trade it on these rhythms that it has, is it usually sells off after earnings, and then it usually builds up steam going into earnings. Wasn't really the case on this earnings though, like it has been on the past couple. and then it will sell off. So again, the zone is $15.25 to $16, and it's gotten a lot of reactions. Okay, Palantir. I like Palantir. PLTR for Palantir. Let's see. Let me get my cursor in the right place. Let me look for any upgrades, downgrades here for Tattooed Chef right quick. And then we'll look at Palantir. Palantir right now, it bounced off of this $18 zone right here. I've got a zone. It's $18 up to a high of $20. That's a nice buy zone for Palantir. And this is one that you've been able to trade this one pretty successfully, buying in this zone. The last time it was in this zone was back here in May of this year, and it got to a low of 1634. You can see I've got that tag, right, that marker there for it. And then, of course, it ran up from there. And then prior to that was just after going public. I think it went public for around $10 or something. So this is definitely a good zone right here where it's at. Again, that's $18 on the bottom of the zone and $20 for the top of the zone. The last for Tattooed Chef, excuse me, I don't have anything recent on it. All right. So yeah, Palantir, it's in a buy zone. $20 is the top of that. But again, Palantir is one that I would be stacking to hold it for the long term. You know, maybe you can take a portion of it to trade it, because when it gets around 30, when it gets around $25 to $30 in that range, that's usually where it peaks out, and that's where it's been peaking out. So you can buy it now, hold it to 25 or 30 in between there, and sell it, and then repeat the process all over again. You've been able to do that several times now since it's gone public, but I like Palantir for the long term. Tattooed Chef, I'm not too crazy about. I don't think it's got enough of a market out there yet anyways for it to do anything. So yeah, any other questions, just let me know. I love answering them. Definitely love to answer them. All right, well, I had a couple stocks I wanted to dive into. I can save them for tomorrow since we've been going here about an hour and 38 minutes now. Let your questions roll in if you got any. If not, then I'll probably wrap up the stream here since we've been going for a while. Definitely want to thank everyone for being here. We've had fun. No, if you got any, I'm good. I can stay here for a little longer. If you've got questions, let me know. I would definitely look at them. You are welcome. I hope that answers your questions. I know I didn't sound too positive about Tattooed Chef, but we all have our own opinions, right? We all make our own investment and thesis. We all come up with our own ideas on stocks. So definitely don't take what I say as absolute. You know, we all do our own research and we all come up with our own conclusions. Nothing wrong with that. All right. Well, I'll just talk about some of the winners here for just a moment. Maybe I'll dive into a couple. Maybe if I wanted to talk about AutoZone. So if you wanted to hear about AutoZone, I can talk about that if you want. That was one we talked about in the After Hours video. Ticker symbol is AZO. It did really good. When I was talking about AutoZone on the Catalyst Watch video, I was a little on the cautious side because the last auto parts store reseller, I got wrong, not too terribly wrong, but I missed it. And I thought AutoZone had potential, but I was cautious. The thing went up 7.6% today, so it had a great earnings reaction. I mean, and this is an expensive stock too, so it's $2,023.57, and it's up even more, just slightly, $1.29 in after hours. So yeah, it's an expensive stock, but it moved 7.6% today, so that's good. It has a market cap of $39.4 billion. It did really, really good. Well, since I already got it pulled up, maybe I'll just go ahead and yes, I've been watching too much financial education. That's okay. That's fun, right? Okay. Well, I guess I can go ahead and talk about AutoZone. If I know it's an expensive stock, but we can always learn something from stocks like AutoZone. Even though it's expensive and it's out of our price range, we can definitely still learn from it. So I'll just do it. I'll just go ahead and I'll just go into AutoZone. So you can see it's been in a beautiful channel for almost this entire year. It's just been going up and just moving in this very defined channel. It definitely have moves around earnings. I should put another vertical line here for today's earnings that it had. Monday, you want to know? Oh, yeah, Monday, actually, that one you should be cautious with. MNDY. Is that Monday? Yeah, Monday.com. You need to be careful with Monday.com. Let's let that chart load here, and then I'll put a couple lines on here and talk about it. You know, it popped 10% today, but let's see here. Okay, let's see. Okay, so what day was this? Tuesday. Okay. All right, so actually not as bad as I might have thought here. So the IPO lockups for Monday.com, they expired on Tuesday. So it's actually rebounding nicely. So whenever IPO lockups expire, that allows certain people to sell stock in the company if they want to, and that can provide selling pressure on the stock. But it fared that very well. It actually has rebounded nice. It was up 10% today. This is one I kind of have written off this week just because of that, so I didn't look into it any further after that IPO lockup. So I mentioned this on Sunday about the IPO lockup. This fall right here was significant, especially since it's under that 50-day moving average. And, you know, I talk about that all the time. And I don't think we have a 200-day yet. I don't think it's been on the market that long. But we are able to get the 50-day at least getting started on here. And it looks like once it went public, it built up a nice base right here. I would say this is a low of $206 up to a high of $126. I mean, it's a $20 gap in there, but that was a nice base that they built here after going public, which then led to this big rally that it had, and it was almost starting to form another base up here, which we could probably say we've got 337 down to, where did these lines meet? Probably 318 is another zone here where it was trying to build a base. And it looks like it's getting back up into that zone. So today, it did run up 10%. The candle wick, though, it got to a high of $326, which would have put it in this zone, the top zone here. But then it pulled back from that. So tomorrow, if it can get back into this upper zone right here, and again, that's a low of 318 and a high of 337, then I would shift this thing to being a little bit on the positive side. The RSI is at a 36, so it's not oversold or overbought. It's kind of just in the middle there on the lower side of it. Volume was a little light today, and that could be why there was that 10% move, because volume was light. We had 619,000 trades today for volume on an average of 783,000. So volume a little light there, but I will note, even though that's light volume for the current average, the volume that we've seen since earnings is substantially more than what we saw during this consolidation phase after its first run-up of being a public company. And of course, that was its very first earnings, and second earnings. The first earnings is what really triggered the rally. You can learn a lot from the beginning earnings of a company for how they're structured. But yeah, if it can get back up into this upper zone, I would feel more comfortable about this thing. You might find some resistance around the 50-day moving average, trying to regain or maybe start to build a base and run just under that 50-day moving average. That's always a possibility here. So the last thing that I have, let's see here, on Monday.com is way back in November. So there hasn't been anything really since earnings for this. There's no upgrades or downgrades recently for it, so it's just kind of doing its thing. Right now, it looks like the average price target is probably around $260. So there's definitely some disconnect here between investors and analysts on Monday.com. So yeah, technically speaking, you got two zones there when it first went public, and then more recently, this one at 318 up to 337. So yeah, there's some thoughts on Monday.com there for you, Rebecca. Thank you for asking. I love the questions. Absolutely love them. Okay, thank you. You are welcome, Rebecca. I use the program and really like it. Cool. What program? All right. Well, that I guess if there's no other questions, I'll wrap it up here. Thank you guys so very much for watching. I do appreciate it. I love the community. I love the questions. I'm here every day, 5 o'clock, to talk about the market, talk about stocks. I always have a list of companies to talk about.
But the most important thing is talking about what's on your mind and answering your questions. So I'll see you back here tomorrow at 5. Thank you so very much for watching, and I'll see you